Aloha, this is Kurt Nielsen with eMortgage Hawaii with your weekly market update. As most of you are hearing, mortgage rates have dropped significantly over the last few months. We are closing in on a 2-year low on mortgage rates. For those borrowers with good credit, the 30-year fix is approaching 6%, and the 5 and the 7-year ARMs are in the high 5% range. So now may be a good time to buy or refinance, depending on your situation. Now, turning our attention to the economy, there's growing evidence that the job market is losing steam. Last week, initial unemployment claims hit a 4-year high, and continuing claims now stay above 1.9 million for 16 weeks in a row. That is certainly a sign that more people are staying unemployed for longer. Even more eye-popping was the BLS reporting a revision to the job growth numbers. We've been saying the BLS has been wrong for years. The latest quarterly census of employment and wages cut previously reported job gains by 911,000 jobs for the 12 months ending in March 2025. That's an average overstatement of 76,000 jobs per month, and is probably why the head of the BLS was fired. The latest downward revision is the largest on record, and in short, the labor market has been weaker than what it has appeared for some time. On the inflation front, numbers were broadly in line with what analysts had projected. The consumer price index saw a modest increase, with annual inflation edging only slightly higher to 2.9% compared to July. Core CPI held steady at 3.1% annually, and the wholesale inflation actually showed a drop much further below than the forecasters had expected. With the job market clearly softening and inflation largely meeting expectation, the Fed is expected to shift gears. Markets are now pricing in a 100% chance of a rate cut this coming Wednesday on September 17th. But remember, when the Fed adjusts rates, they're targeting the short-term Fed funds rate. That doesn't directly affect mortgage rates. And in fact, the mortgage market has already priced in this rate cut. So we don't expect a big movement next week unless the Fed comes out with information that they may be moving to more neutral monetary policy, which would really help rates. So if you're thinking about buying, refinancing, or just have questions from the market, please get a hold of me. You can reach me at 808-896-6800. Thank you again.